Okay, so it is time for the January 2026 versus January of 2025 monthly stat market report. Here we go. Okay, so we talk about on our market snapshot quite often why we use those lead measures so that we can make real-time decisions. This monthly market report is important because it gives us a bird's eye view of what's happening in the market. But it's important to keep in mind, you don't use the monthly market report to make real-time decisions on how you're going to write an offer if you're a buyer, or what kind of offers you're looking for as a seller, because the statistics and the numbers in this sold data is quite often 75 plus days old. Well, how does that happen? Well, the information that we are going through, we're going to go through the sold data for January. So let's say that a property sold January 1st. Okay, that's going to be included in this market summary. If that property sold January 1st, it likely went under contract December 1st or sooner. So that property went under contract December 1st, right? That December 1st activity is what we're looking at, rounded up into this report. Well, today is February 6th. So not only was it December 1st, January 1st, then it was January 1st to January 31st to be included in the January sold numbers. And now it's February 6th because we had to have time to let all the numbers get in and aggregate the numbers, if that's the right word. So this information can be as old as sometimes, 60, 75 days old. So you can't use it as real-time data, but you can use it as an overall picture of where the market is trending. So that's why it's important to look at it. All right, so let's get into the data. So new listings in January of 2026 versus 2025, we're up 1.1%. So we went to 837 versus 828. The number of sales were down. We were at 577 in January 2026 versus 586 January 2025. So it's down 1.6%. So what that means is supply went up, demand went down a little bit. Now, this is not something it's something to look at, but you have to keep in mind that last week of January was when we had that snowstorm that came in. So that really affected a lot of transactions at that time. So we were down just a little bit. So the net was a little bit moving a little more towards the buyer's market. So let's see if the rest of the information trends with that. Days on market, January of 2026 was 31 days. January 2025, I put plus 4 days. I don't know where I got that. It was actually plus 7 days. January 2025 was 31 days. Now, January is always the highest month. It's been that way for years and years and years. The days on market sits higher in January. And I think that's because December tends to be a little bit of a slower month with regards to transactions. But what happens here is in 2025, we saw an upward trend on days on market. And we've been talking about that each month for a while. Properties are still taking a little bit longer to sell, but they're still appreciating in value in a general sense. So, so that 38 days on market just follows trend of what happened towards the end of 2025. But it doesn't mean that the market is necessarily crashing by any means. Months of inventory, this is very important. This is if you took the number of properties that were on the market right now and you took the number of properties that had sold and you figured out what that ratio was and you continued at that rate, how long would it take to sell through all of the inventory that is on the market? That's called the absorption rate. Anything 5 to 6 months is considered a normal market. Anything 6 months and above is considered a buyer's market. Anything 5 months and below is considered a seller's market. And you can see we have been consistently at 3 months. So we're still in that seller's market. Even though properties are taking a little bit longer to sell, we're still in that seller's market. Now, median sales price. This is something that we need to dive into a little bit more, and we've done this over every couple of months. I'll dive into what median sales price means. So basically, median sales price for January 2026 was $679.5. For January 2025 was $700. So it was actually down 3%. Now, does that mean that home values went down? That does not mean that home values went down. So what does that mean? Median sales price is calculated as the number that falls right in the middle of the sampling of the numbers that are the transactions that occurred. So it doesn't mean market value, it's that number that fell right in the middle. When you have a large sampling, it's the best number to use so that you don't have like a really, really high sales price skewing the average up, or a really, really low sales price skewing the average down. So we don't use average sales price, we use median sales price because it's really the best number that we can use to give us an idea of market value. But it doesn't truly indicate market value. So what do I mean by that? So here's a simple example. Month one, these were the sales. Okay, we had 11 sales, 3 million, 2.75. You can see the numbers. 500,000 falls right in the middle. So 500,000 would be the median sales price for month one. Month two, you can see the sales for that one. Again, now look at these numbers. These numbers are all higher than these numbers. These numbers are all higher than these numbers. But the one that fell right in the middle was 400,000. Okay, so if you look only at the median sales price, that means that for month one, it was 500,000. Month two, it was 400,000. That's a drop of 20%. So the media is going to present this, in this situation, the media is going to present this as home values are dropping 20%. That means that a house that you bought here that was $500,000, you could now buy for $400,000. And that is not the case. You can see all these property values were going up. You have to look at market value on an individual property basis. Neighborhoods can be going up and down. Cities can be going up and down. Counties can be going up and down. Nationwide can be going up and down, but they're all independent of each other. And a lot of people are listening to national news and looking at our market, and they're sitting on the fence waiting for prices to crash, and we're not seeing evidence of prices crashing. So that's why it's important to understand what the statistics are and what they actually mean. Now, why did the median sales price go down in January versus January? That's just where the number fell. Maybe people were looking at less expensive properties. I don't know what the answer to that is, but on trend over the year, market values went up over 3% in Fairfax County last year. So we did appreciate 2025. It's not the 15% that it used to be, but it did still appreciate. So it's important to understand that. And now we can look at history. Okay, so nobody can predict what's going to happen. Nobody has a crystal ball, but we can look at history and see, okay, what tends to happen. So the first thing we want to look at is since 1942, and this is through 2022, 2023, 24, 25, these numbers all went up. We've all seen the appreciation, so there's no question on that. But since 1940, there have been 73, we'll say now 76 years where we've had positive appreciation. Okay, that's 76 out of 84 years. There have been 7 years where we actually had negative depreciation, or negative appreciation or depreciation in home values, and there's been 1 year where it was neutral. In those 7 years, 5 of those were in the 2007 to 2011 range when we had the huge financial crisis, which was caused by the real estate industry and the improper lending techniques that were being used at that time. So basically, 5 years we had a huge price drop, and there have been a lot of things that have been put into place to correct that. So there's a lot of equity out there right now. So even if values did drop a little bit, a lot of people aren't going to go into foreclosure because they have equity in the home. They would just sell it. You're not going to let it go into foreclosure. You would just sell it and pull your money out of the property. The only other situation where it happened was in the 90-91 range, and there was a little bit of a decrease there. So if you're waiting for a market crash to happen, historically, there's not a lot of evidence that it is going to happen. And if you look at the decade, there has not been a single decade where there has been a loss in equity of properties, because statistically they have always gone up. So if you're buying a property and you're speculating in over a year or two, that could be a little risky. There might be a little fluctuation in the market. But if you're planning on holding a property for 5 to 10 years, you're going to be okay, and you're going to build that equity, if that makes sense. Okay, well, what about the election? The election had a lot of effect on what happened. It felt like, even in our area, it was affecting a lot, but we still saw appreciation over 3% throughout the year. If you look at 7 of the last 8, now it's 8 of the last 9 presidential elections, property values have gone up after the election occurred. The only time that did not happen was 2008, which was the great financial crisis, which was caused by the real estate industry. So if you're waiting for market crash to come, you're really waiting on the fence, and you're costing yourself money, because even at only a 3% appreciation, if you're looking at $700,000 this year, that house that was $700,000 is now going to cost you $720,000. And if you wait another year, it's going to cost you almost $750,000. So you're going to end up pricing yourself out of the homes that you want. If you would like us to look at your situation individually, please reach out to us, either from a seller's perspective or a buyer's perspective. We'd be happy to sit down with you. 703-783-2143. Have a great month out there, and we'll see you in March to go through the February numbers. Take care.